Yeah, thank you very much to all of you. Please have a seat so that we can continue with our second panel this morning. To introduce this panel, let me remind you that the Minister of Finance in his welcome address mentioned that ISSB and Goethe University, especially the House of Finance of Goethe University, have signed a memorandum of understanding recently to formalize a little bit the establishment of an academic network around ISSB here in Frankfurt. Academic partners in these networks are institutions, of course, Goethe University, House of Finance, Leibniz Institute SAFE, the Leibniz Center, Senckenberg, the Institute for Social Economic Development, but there are also partners from outside academia. Among them, a very prominent member is DRSC, and Mr. Lanfermann has also signed this agreement some weeks ago. We're very glad to have you on board. Let me also mention that Georg Lanfermann, who is the president of DRSC and vice president of the EFRAG board, represents DRSC, that is also for quite a while a very reliable partner of Goethe University's accounting department, where there is a close cooperation also in research. So I'm very glad that Georg Lanfermann will moderate this next sessions. Please, Mr. Lanfermann. Thank you.
Thank you very much. It is a particular pleasure. And as you said, we are engaged also in the end, very much in the end with Frankfurt, with Goethe University, with the ISSB as simply like the standard setting institution. This has been for us as a national standard setter particularly important, simply to being linked into that community, and also for us as DRSC, as the German accounting standard setter, being one of the really partners in this public-private partnership also to get the ISSB to Frankfurt. So this was for us a matter of heart. This is also one of our goals in the sense, in the end, providing also to German companies in the end, in immediate international, let's say, perspective in reporting, and thereby in the end, for us, also a natural thing to be in this way in this partnership. Today's panel is about a subject that we have already briefly touched upon. I think we've heard some of the anchor points already from Emmanuel Faber. It's about, in the end, global comparability. And I think this has been like a leading theme just from the beginning. We had a parallel development in Europe. We had the development of ESSS. We had the international dimension to that, which all happened more or less at the same time and has been a leading theme. And we heard this with all these different initiatives, simply to getting everything together. We heard about, in the end, new initiatives, how we can bring in the scientific landscape of Frankfurt into the equation. We hear about international standard setting activities, which are also important. How can we make sense of that? And this is certainly the topic that we want to now dive deeper into in this session. So we have also a distinguished panel that I would like to invite then also to the now floor. We've got from the ISSB, we've got Jenny Bofinger-Schuster. I will introduce them a little bit. I think she insisted half an hour introduction. No, sorry, we make it shorter. Jenny Bofinger-Schuster is member of the board, the ISSB board, and I think to make it really brief, I think we can summarize this. In the end, you have a distinguished career in the also German corporate scene. In the end, you have been the sustainability or chief sustainability officer of Siemens simply before joining the board. Then I think about 2 years ago now.
1.5 years.
1.5 years, make it nearly 2 years. So I think we have a very excellent expert also in the end with a good background here from German corporates. And a second person that I would like to invite is then Kerstin Lopatta. There she is. I nearly, first she didn't see me, now I didn't nearly missed you. Kerstin, good to see you. Join us on the, I think we can, please here. Kerstin Lopatta has a quite key role. She's also on one of the, let's say, the technical committee of the German Accounting Standards for Sustainability Matters. But I think more important, and most people will know her from her role in EFRAG, where she is at the moment the vice president of the Sustainability Reporting Board. And I think I'm very thankful also to Kerstin, because she took on this what's enormous task also on, because in the end, if she fills the DRSC seat on that in this committee, having done a tremendous job over the last 2 years, simply like in pushing things forward. And we hear later on also a little bit more about her role and in the end driving also this interoperability issue forward. Let's move on. We've got now the standard setters perspective. We've got also in the end people in the end who, and I think if we talk about comparability, a global baseline, who are in the end also benefiting from that. And in this way, we have Lushendren, who will join us from the Basel committee. Welcome, Lushendren.
Thank you.
Take a seat. He's got a distinguished career. I think you've spent most of your time in South Africa before joining the Basel committee, and also there, in particular, in your last phase, you have been had CFO roles and also leading roles leading up to that, but also then some years with the South African regulator, and then later on joining then the Basel committee, and now being, let's say, member of the I would say Secretariat of the Basel committee. Welcome.
Thank you.
Furthermore, we've got Gerald Podobnik from Deutsche Bank. Welcome. Also in the end perspective from, I would say, the finance community. I think you are also, I would say, quite prominent person. I met you, I think, last time on Friday at the Sustainable Finance Council of the German government. But you have in the end, let's say, a very distinct role in the end, or various roles in Deutsche Bank in your career. In particular, I think I have to read this because in the end, it always simply like it slips a little bit from my mind how you can actually bring a title to such kind of important position. We've had, this is not easy one, for you, the Chief Financial Officer Investment Bank. This is the exact title, and Corporate Bank and ESG of Deutsche Bank. So in the end, a quite important player in the end. If you look at something like sustainable finance being debated in Germany, you constantly come across your name. Welcome. And last, also from the Frankfurt University, Professor Tobias Berg. In the end, welcome. Tobias Berg does a lot of, I think, also research sustainable finance related, also in the end with a, let's say, focus on what you call it, real effects in the end on the various players. So in the end, he will enrich today's discussion from that perspective. So I think this is our panel for today. So we've got certainly with the issue of global baseline, a certain interaction between the standard setters and the important standard setters, but also in the end, getting from you the perspective, certainly, is this really what we want? This is something, how can we use this in practice? How can we make this in the fruitful in our work, be it from the regulator side, from a banking perspective, also from a scientific perspective. So let us jump into that discussion. And I think we start, I think we heard a lot this morning, I think from Emmanuel Faber, trying to simply like bring a lot of already buzzwords, keywords about what global comparability, this global baseline, and in the end, how can we foster that issue of comparability, that we've got a number of ideas, because in the end, as I said, we have a lot of aspects. Maybe we start off then with Jenny, simply like from your experience as a board member in the nearly 2 years that you had now on the board, with certainly some kind of your personal experience and like how you have seen this evolving now over the last 2 years, because I think starting with such kind of board just from scratch in the end with I think first 8, now 14 members certainly has been a come back to the journey. Certainly also a certain development over the last 2 years. And how have you perceived this in the end, idea of global baseline evolving? What was your experience?
Yeah, maybe I start even a bit earlier, because I was in the room at this COP26, so the World Climate Conference in Glasgow in 2021, when it was announced that there will be an ISSB and it will be home at the IFRS. And that was actually my personal starting point of this journey here, because when they announced that, I immediately felt that's genius. It's the right thing to do. The IFRS is the right home for that. And it's so much required. And I felt that because at that time I was responsible for the disclosure of Siemens. And it was that's my personal perspective, frustrating doing that, because particularly if you wanted to do it good and right, and also share and disclose your progress in a proper way, it was just hard to do that, because there wasn't this one standard that you could rely on. You didn't really know what is now the right thing to do. And so that there was, and there is, a strong need for having one global framework that everyone is using, and that is then giving the right information to the capital market, that they can compare, that it is apples and apples. That is just super required. But that's now the pre-story. Now in the 1.5 years that I'm on this journey as a standard setter at the ISSB, I have to say I'm pretty positive about the progress that we see, and I think you've heard much about this already in the morning sessions today earlier on, because I mean this is a multi-dimensional game, right? You have to have the content, and we have the first 2 standards ready, published, and there to be used. S1 and S2 are covering the full set of sustainability risks and opportunities, as we've heard earlier today as well. So this is a very, very important first content step. We do see extremely positive feedback and resonance from the market participants. We have super strong international backing from many organizations, be it G7, G20, IOSCO, and others. We see that in terms of capacity building, helping the countries, helping the companies in education, that they can apply that. We have sort of the right materials more and more available. And then in terms of countries, and we heard about this as well already today, we see that more than 20 countries are now very actively on this adoption journey. We've made great progress with Europe, and I'm sure Kerstin and we will talk about this then later in the session today. And so the overall tendency that I see is extremely positive, and I see how these different puzzle pieces are moving together. And again, I strongly believe, and that's why I'm doing it, that that's also required and now really important to happen.
Okay, thank you, Jenny, for this kind of first, also personal impression, I think, which is important. Something to get a little bit of flavor, simply like how this is the board operating, how this is perceived. I think this is a lot of progress has been made, and I think in the end the numbers have been also like, or the facts have been presented by Emmanuel. Like that 50% of global GDP is underway, simply like to adopt the standards. And that we see also key role here. Later on we come to you, Kerstin, seem like to discuss like, also like how does this fit into the European sphere. Perhaps to Lushendren, to you a question then. If the Basel Committee also very early then to be supported already in the end the ISSB initiative. Anything to add from that perspective? In the end, already as a kind of like first experience, simply to say, okay, have we been successful?
Yeah, thanks, George. So to start, I think the Basel Committee had taken an approach towards climate-related financial risks by understanding that as part of its mandate, which is to protect risks and vulnerabilities to the banking sector in order to enhance financial stability, it should look at climate-related financial risks. As part of that, it had issued analytical reports in 2021. In 2022, it had issued the principles for the management and supervision of climate-related financial risks. And last year, in November 2023, it had issued a consultative paper on the disclosure of climate-related financial risks. And as part of this consultative paper, it had sought views from the market as to the potential for a Pillar 3 disclosure framework. And Pillar 3 complements the other two pillars of the Basel framework, where Pillar 1 is regulation, Pillar 2 is supervision, and Pillar 3 is public disclosure. And in developing its consultative paper on climate-related financial risks, the Basel Committee had built on and complemented the ISSB's IFRS S2 together with other global standard setters. And in terms of what it is consulting on, it's tables and templates that takes the ISSB's IFRS S2 and adds on to that specific bank-specific metrics that it feels would be useful for users to help them understand the risk profile of banks. Unlike the ISSB's IFRS S2, and as spoken about earlier this morning and now by Jenny, which focuses on opportunities, the Basel framework focuses on risks. And that's not to say that we don't feel that opportunities are relevant, but the mandate of the Basel Committee is on the risk profile of banks to enhance the safety and soundness of banks. So our framework goes to look at the risks that banks are exposed to, and we do this amongst our 45 members in 28 jurisdictions in a framework that's applicable to internationally active banks. And that is what we're consulting on now. As part of our consultation, we've held 3 outreach sessions. We had one here in Frankfurt in February, and we had 2 virtual sessions for the Asia Pacific and for the Americas. And as part of that consultation process, together with written feedback that we have taken, we are working right now on addressing that feedback and coming up with either a final disclosure framework or a revised consultation by the end of 2024. And we understand the importance of interoperability, and I think that's the topic that we are discussing today. And a key tenet of the Basel framework around interoperability is that we do not want to create a reporting burden for banks. So the Basel framework prior to this has always had a provision for signposting, what is termed signposting. And that allows for people disclosing, or for banks that are making disclosures, to actually signpost where else they've used such disclosures. So you disclose something just once. And that, we hope, reduces the burden for banks because those provisions do apply. So I hope that gives some clarity as to how we're trying to get a baseline for reporting, knowing, of course, that jurisdictions may go above and beyond our baseline to enhance for their jurisdictional specific requirements.
Thanks, Lushendren. I think this makes clear something like this is already taken up in your work. Something like to say, how can we define these Pillar 3 risk requirements? Risk, of course, not opportunities, but in the end, having already the uptake already immediately in your framework. Before we dive deeper into this, because in the end it gets to quite some level of detail already, simply like we may go back then simply like one step back before we also come to the banks and the scientific perspective, perhaps to Kerstin and her work in the end in terms of, and you said interoperability is the topic, of course, today. Your experience over the last 3 years?
Yeah, roughly.
In the it seems like because you have had already there in the end the interim chairmanship role and things where you had, I think, a very close insight also in the end how interoperability came about and the end how you judge that in the end development until we have seen now this declaration.
Yeah, when I started as the acting chair, I mean, I had some talks with Sue Lloyd, and by that time we had a totally different structure of the ESRS. So I thought, okay, if we need, and she explained to me, if we need or want to go to interoperability, we of course have to fulfill some requirements, and that was of course the structure. So that was very basic that we started with. So we first talked about that, but then with EFRAG we have been very busy to develop SET1, so nobody really cared about interoperability. But after handing over, of course, SET1 to the EU Commission, we got some tasks from the EU, and we also, of course, saw that we need interoperability. And by that time, we started working on that. And I think, Jenny, you remember also the first days, or it has been almost a year that we started with this interoperability table. And we, of course, had different views and different perspectives. We developed different tables over the time. And what you see today, what's on the table, is really the achievement of 1 year work with ISSB and EFRAG and the EU Commission, of course. And I think it's a great development that we did also with the standard setters, how we came closer, and it will also be somehow the guideline for the next development. I mean, the ISSB is now working on biodiversity. We already have E4 as biodiversity. So from my perspective, the question is more, how do we move on? So will we again have an interoperability table?
Perhaps we have to keep it to the second part of our discussion, simply what we do next. So like first do some kind of stock taking, and then simply deep dive into what can be next.
Yes.
Because I think this needs a certain concept.
Yeah. So the interoperability table that we have now, and I said it on Friday, it's very very nice because it has only 36 pages. As I said on Friday, Georg, we usually from our EFRAG perspective give nothing out that has on average less than 80 pages. So it's nice to read and you get through very easily.
Thank you, Kerstin. I think in the end, this simply shows that has not been, it needed some lead up time to get to that result. Perhaps an additional question on that, from this perspective, because I think also EFRAG has been, we heard this morning from Emmanuel, seems like it's important also to get closer in the end, talk more with GRI, perhaps also develop in the end common things. How do you judge the relationship of EFRAG then, for example, with initiatives like GRI in the past?
Yeah, I mean, we talk with all standard setters, also with GRI, and of course now as we are developing our sector-specific standards, Georg, we are including their metrics somehow. So we also talk with them. We have a memorandum of understanding, and but as I said, so the EU has his or her perspective on the standards, and I think they see also the pressure from the market and from stakeholders to develop that, and that's why they go ahead with their perspective on all these things.
So this sounds a certain like pressure on convergence, like all the players in the end being involved in that, and not in the end simply say, okay, we've got one isolated or one solely leading standard in the sense, in the end, because we have a certain role for the international side, we've got some European ambition in terms of like being also in the end compatible. This allows me to ask also Gerald Podobnik in the end to say, is this what you intend to have in the end, to simply say, okay, at the moment we have already some certain degree of interoperability. Are you satisfied? Is this what you imagined, or could this have been different already?
I would say sustainable finance in general is a journey, right? So we should never be so critically to say, are we satisfied with progress? Because progress is there, right? And I think there is substantial work being done to solve the issue. And for us, a sort of a global baseline is hugely important. This has to do with two facts. The one is we are operating in nearly 100 countries. We are listed both in Frankfurt and New York. So whoever has rule, we will have to likely apply it. And this is not just Europe and the United States where we're listed, but it's also nearly in all the countries that we're active, some sort of disclosure rule is being developed. So if you are a big bank, you obviously do global consolidated statements, but you also do local statements to local regulators. And in various jurisdictions, we operate in subsidiaries, and there you go. So the more global baselining that can happen from that perspective, the better it is for us. The second reason is, as a bank, we are active in capital markets, and capital markets always operate on standardization and scalability. That's how capital markets are built. So for our business, this is again hugely important, because we need to develop products, we need to advise clients, we need to work with data. And the only way that we can do the right things, i.e. advise clients in the correct way, have good products that help clients on their transformation journey, is by having some sort of comparability there. And I think the ISSB has done huge work and has achieved a lot in this very brief time that the standard setter was set up, to go in the right direction. the question about satisfaction, when you ask this, usually people start to complain about the burden and that everything is complicated. But to be honest, life is complicated. And I think we need to see this really as an opportunity for all of us to sort of make our companies fit for the future and invest the work in our own institutions. And I think this is what I realized when speaking to lots of peers, that there's so much work being done right now in global banks. Everybody has their own sort of approach. And in a couple of years, we'll be far, far ahead, I would say, compared to where we are now. But it requires work and it requires effort. And that maybe is sort of the bigger challenge sometimes on our side. It's not to read the standards and apply the standards, although this is a lot of work. But the bigger challenge, I would say, is to make sure that you have the right approach in a company about it, that you make sure that you're consistent if it's a big company, and that you motivate all your internal stakeholders, which in an area like sustainability are nearly everyone, to contribute to it. But I say for me, it's exciting, right? We develop something completely new, all of us. Financial reporting has been quite set, at least for most areas over the last decades. So to develop something new, I think is quite exciting.
Thank you, Gerald. Perhaps also a follow-up question on genders. Views on the regulatory side, also integrating this into Pillar 3. Is this we talked about the complexity also in the end of regulation. Is this certainly, from your perspective, helping them? If you say, okay, we are a global bank, in the end to integrate them directly in the end, if you say, okay, climate risk related disclosures are in need, that this is certainly a step forward?
Bank regulation is always complex. And particularly since the last 20 years, bank regulation has become quite complex, so we know how to deal with that. I would say that for us, it's always about both risks and opportunities. So in risks, indeed, it's regulators, not just the Basel Committee, but also most importantly, the European Central Bank, who help us quite a bit by explaining to us what they require us to deliver as inputs. And as you can imagine, if a regulator tells you, this is where I would like you to go, the organization moves. So I think that's why I will make a tick there. But it is really about risks and opportunities. And I think that that's really important to see that for us, sustainability and sustainable finance is about our future competitiveness. It's about winning market share. It's about earning money. And this is what I think motivates and unearths a lot of energy in an organization. And that's what I also would like to leave here is it's important to see this from both sides, not just see it as a risk side, but see it as an opportunity side, because what I realized, having done this for quite some years now in Deutsche Bank, if you would like to motivate a large organization, we have 90,000 people, as I said, in 100 countries, in lots of different business areas, then the one thing, that motivates people is if you can clearly make money out of it. This is what helps people go the right way. So that's why what I like about the ISSB approach is that it's about both. It's about risks and opportunities, and that balance, I think, is important for us as a commercial company to move it forward.
I think this already underlines, I think I heard also this morning from Emmanuel Faber-Berg, also this should be normal. This should be part of the, in the end, doing business, that you don't further reflect on that, simply make it part of the success story. And that this certainly also for you is the motivator in this regard. Turning to science or the scientific, let's say, evidence in the end, is there something from your side, Professor Berg, to suggest him, like, where are we on that journey? Is there anything from your research where you would say, I can see a clear benefit from something like having a global baseline approach?
Yeah, I'll start with a very high level. So I think there's a lot of demand for sustainability disclosure. And so it's good that we get standards. It's good if we get global standards. And in that sense, the work of the ISSB is really important. And it's important that it's done right. I frequently get a lot of questions of the type, does this make the world a better place? Yeah, this is what I call real effects of regulation or accounting standards. And I think there we have to be a little bit humble, because sometimes I think expectations have gone ahead of what these things can actually deliver. Just to point out to two elephants in the room, I think here. The first one is that disclosure is typically always for what I would call gray areas. Yeah, to give just one specific example, when we talk about human rights, yeah, if you use in Germany, if you violate labor laws, if you use child labor here in Germany, then you don't disclose that and leave it up to investors to decide whether this is a big risk or not. But police and prosecutors will come and say, this is not allowed here. Okay, so we have to make our mind in many cases, where do we need a regulation that actually regulates specific activities? And where is this gray area where we said we need disclosure of it, and then we leave it up a little bit to investors to decide. And the second elephant in the room, I think, when it comes to real effects, or does this make the world a better place, is that as soon as companies actually sell parts of their activities, maybe the most polluting ones, it's no longer in the scope of what needs to be reported. So something that is no longer a risk for a company can still be a risk for the planet. And we've seen that with climate emissions on an extremely large scale, that those firms who needed to disclose, those firms who faced pressure from activists and from investors, that they've responded simply by selling these emissions or these emitting activities and factories to firms who are less in the public limelight. So therefore, overall, yes, we clearly need a global benchmark. I think this is extremely important. At the same time, we need to be a little bit humble and don't expect too much out of it in terms of, does it make the world a better place? We still need the actual regulation for this that regulates certain activities.
Thank you for this view, and also underpinning simply like we have to simply see those real effects, and this is also has economic consequences. But I think in the end, if we talk about now disclosure, I think we are seeing also development which now leaps into the future in terms of something. What are we doing in the end? We have got now the climate disclosures and also certain, like this 95% degree of interoperability already achieved in the end, to in the end have a clear information base. But certainly the question is also on the table now, what comes next? And now we can certainly dive more into what all the aspects that Emmanuel mentioned earlier on this morning, simply like being important aspects. And as I said, in the end, it's part of a big puzzle probably in the end to get to that. Jenny, what are you in the end, certainly in terms of like being more concrete on the next topics, because we have also a session then afterwards, after the lunch break, we will also dive into some aspects. But from your perspective, and if you have to do an outline, similar like of the work plan, perhaps also with a personal note on that, perhaps, and you say, okay, this is what we are working on. We've heard ISSB standards, we've heard particular topics, but perhaps you could give us an outlook from your personal point of view.
So I think two things are important as a kind of disclaimer for what I'm saying. One is, and that's really key and sometimes misunderstood, with the existing two standards, S1 is already asking for the disclosure of all material information about all your sustainability related risks and opportunities. So again, climate first, but not only. Already today, if a company is applying our standards, this company needs to disclose all sustainability related risks and opportunities. So that's key to have in mind. And I think the second important topic is in terms of what's next, and you've kind of heard that earlier today. This is based on consultation. So it's not us as a board sitting together and thinking, well, what would be a beautiful next topic? But what we do is market driven. And we had a consultation open for 6 months. We received more than 400 comment letters. By the way, also one from the DRSC, having you here on this panel. And that is what we then digest and what we then use as a basis for decision. And what we've heard from our stakeholders in these more than 400 letters is on a higher level, that they really want us to focus on the implementation of S1 and S2. So really helping worldwide to have what we have now already developed implemented in companies, in countries. And that's really key. And that was a very strong voice that we heard there. And only after that is then the wish to enhance the ISSB standards and to look into new research projects. So on the new,
I think we did discuss later on also the implementation aspects. There was another panel, but at the end
on the new research projects, the two topics that are now being transferred into research projects is biodiversity and this human capital. And what is now key in these research projects, and you've kind of heard this already also before, is to really understand what is the market demand. We all know that biodiversity, if we start with biodiversity, has a more and more important role. And still, if you also take this global perspective on what is accepted, what is now really key to be looked into, and what is it also when we speak about all industries. This is now the work that we are doing to better understand what is it that investors really want to hear about. And of course, on the other hand, also understanding what is already existing. So part of the progress and the success that you've heard from the last 2 years is that we are very carefully looking into what is already established market practice, what works already well around the globe. And that's, of course, also true for the next topics on biodiversity and human capital. And that's what we are now very detailed looking into, what are really the next topics. And I personally believe in terms of challenges, I do believe that climate was easier, but prove me wrong in the next 2 years. Because I do believe on climate, there was also, particularly on this global scale, a clearer joint understanding. And so I believe this will be very exciting and challenging now research work that we're currently in.
Yeah, I think this is also an important topic, and I think this is already looming in terms of like that. We also talked about in the end. I think it was mentioned by Anna Rolfing-Bastian earlier on, something like this interconnectivity of topics. Of course, I think the EU has had some experience from the ESS side, and it has not been that easy simply to already make. We've had now seems like a whole array of also environmental standards. If you take, for example, the topic of biodiversity, but also there was a certain like genesis in how simply like what can be done already, and this may have to be done in stages. Or Kerstin?
Yeah, I mean, so biodiversity, if I remember correctly, we had a huge pushback after our first release of the draft, and then we somehow pedaled back. Yeah, so going in stages would be good, but I mean, we are corresponding with each other also, as I said, with the sector-specific standards. And so I had to talk with Sue, and she said she's already looking at, what has been established on our side. I mean, coming from the ESRS perspective, it's now always easy. So you have to do a hard job. I see that. And same holds for climate, because we are so granular, but no one in the world would like to say, okay, the EU is great and we follow their standards. So that means we need something else next to it. And I see this global baseline, and that will be the case, right, with biodiversity too. And if you start approaching your topics, I mean, we are usually covering the same problems, Georg. It's, transition plans and all what's behind that. And I think that's what the ISSB maybe can not, I wouldn't say learn, because we haven't, much experience how it will be applied, but at least how to set the standards.
Yeah, there's some first the reporting for 2024 from at least the European standards, perhaps as a source of inspiration. But I also understood simply from the development process that this was already considered, and you talked about this. That climate was easier because it had been much more in terms of material. Not necessarily easier, but perhaps more clear cut in the sense that also their progress is being made. Seems like having further new knowledge about scenario analysis. We have got aspects around now, I think, which is also very prominent in the sustainable finance debate, the issue of transition plans, etc. Which may lead me then again to Gerald Podobnik. In the end, is biodiversity something in the end that is hitting or is appearing on your horizon? You said you're constructing new products. Is this something that is already like keeping you busy in your work?
So we've been talking about it quite a while. But I have to say we are not there yet. And I think there are two reasons. One is we are not done with carbon, right? Carbon is complex to implement. And the issue is that in a bank, the requirement to manage a bank according to certain principles is always the challenge, right? And that is, I think, what we all learn right now, that we all gave ourselves, most of banks that are large gave themselves decarbonization targets for loan books. We have one for our 7 key sectors, so 7 different targets for 7 sectors. And right now we're in the process of making sure that we manage the bank accordingly. And that's what we also learned when we scaled up sustainable finance a couple of years ago, to set the right incentives and put the right processes and management structures in place is quite something. So to have a metric to report is difficult, but to make sure that then you manage the bank accordingly, this is another sort of effort. And this integration, I would say, of carbon management into day-to-day bank management is not easy. For example, if you give yourselves decarbonization pathways, you will come up or have to come up with a carbon budget that you then hand out to your various bankers or areas in all the divisions. So in the end, you start to do carbon treasury, similar to when we do risk-weighted assets management or leverage management, for example. So that is not easy, and we are not done with that. So we will need still a couple of years to complement or fulfill all the carbon management areas that we would like to do. And then the second thing is that in our business, and for banks, the business is always important because we have impact to a far greater extent with the business that we do than with our own operations. So compared to an industrial company, our own operations impact on the world are limited. We have some branches, we do some business travel, but that's not comparable to if you are a chemical company, for example. Our impact is with the business that we do, the loans that we give, the bonds that we underwrite, the derivatives that we trade, the assets under management that we manage, and the like. So this is where really our impact is. And this is where carbon is far advanced. So if you look back already a couple of years ago, there was first of all a global political and society consensus that the world needs to decarbonize, Paris Summit and the like. What followed then was development of data models and early on development of metrics. And that's what we always need when we create products. We need specific metrics that we can put into a product, and we need the data. And if the data is not directly available, we need models, and we need scenario models that are globally accepted. And that's where we are not there yet in biodiversity. So I would say if there would be globally accepted models, and if there would be globally accepted metrics, the market would jump on it and would start to develop products. But that's where we are not there yet. But as I said before, we are not entirely frustrated about it because carbon keeps us so busy. But I would say when it comes, then this is what first will need to happen, right? We need to be able to touch it. And biodiversity is a big word. It involves various dimensions. So most likely what I think will happen is that 1 or 2 dimensions will have to be prioritized. And the minute we have sort of PACT or PCAF-like model base, and we have 1 or 2 metrics that we can measure and that we can put into our products and ask clients to work with, I think then we will have made the next step, but that's not happened yet.
Okay, so you need clear indicators, and you see also this kind of development happening. You need some more, let's say, groundwork to be done in order to translate this into your product development at Deutsche Bank. Ask the usual question also to the Basel Committee in the end. Has this hit your horizon question of biodiversity? Because you talked about climate risk in the end, and your current consultation sounds a bit like Gerald in the end. Simply like we have also in the end, I would say, a certain like sequence of developments.
Yeah, so I agree, and to just take us back again to our mandate as the Basel Committee, which is to see risks and vulnerabilities to the banking sector. And that link we have not at this stage built as yet, and that isn't to say that it doesn't exist, but for now, the work of the Basel Committee is focused on climate-related financial risks. We have considered this in the past, but we've put biodiversity and nature and any nature-related financial risks off the table for the Basel Committee for now. But we are taking periodic stock takes of that, and and considering developments. The Financial Stability Board, as you know, are doing work on this, but that's not actually within our mandate for right now.
Okay,
Thanks.
Real effects from science. Anything that helps us in the end assessing the situation from that you could contribute?
So you mean on biodiversity specifically?
If not biodiversity, anything
Then, yeah.
else you would say? This is...
So maybe a short comment on biodiversity, because in the afternoon we'll see a very interesting academic paper on biodiversity and finance. Indeed, we also struggle from the academic side with appropriate metrics, exactly what you've been saying, because climate change can be kind of neatly summarized into this metric carbon emissions, plus obviously, let's say important but limited set of specific types of physical risks. And with biodiversity, we on the academic side, but I think not only on the academic side, are still in the learning environment to find out what are the exact metrics that we actually need to look at. So I'm extremely curious about the discussion also in the afternoon about it, because indeed, I think this is kind of the one key thing that is really making it a struggle if you want to do research on biodiversity and the financial sector, that there's so limited data availability and the metrics are so multidimensional and complex to analyze.
Thank you.
If I may add,
Jenny,
because
you jump in and
yeah, just one comment maybe, because listening to us, it might sound a bit like, oh, biodiversity, everything way too early. I mean, I do believe there is a clear agreement that for particular companies, biodiversity plays a crucial role already today, and they know exactly what is material to them, and they also know how to measure it. And for them, it's a substantial risk and or opportunity, again, which they are aware of. And I mean, that's not.
No. This was simply like there are differences between
but
carbon,
getting this
as you said, and we are approaching now biodiversity. And I think it makes even sense that momentum just builds, Jenny, in order to simply say, okay, the issue may be getting ripe in terms of if we want to take the next step. We've seen something in the European Union with the ERSRS, a certain a first step. In the end, also their metrics are nearly not existent in the end in this E4 standard. So maybe the time is now. And I think I would rather emphasize the momentum is building now, simply to say there's more room for standard setting, which leads me then automatically to the next question to you, Jenny, in terms of human capital and human rights that may be associated with it. What is your perception? You talked about a lot of countries now picking up also the ISSB baseline, and I've attended a few weeks ago an international standard setters meeting, and there were also discussions about in the end what can we do with this in particular, and there were particular comments around human rights. I think that there are completely different perceptions in different countries on how to deal with this. Because it's about social convention also here, is this a more difficult subject from your first in the end perhaps discussions, or is there a certain more, let's say, different approach? If you say we have science-based, let's say, basis in the end to discuss from, is this different in the end from something that where we in the end may have also science around that, but in the end also partly relates to cultural perspectives. Yeah, because as I said, you may have now had contacts across the globe in terms of what are first reactions to some kind of ideas in the end working on, for example, human capital.
I mean, if we maybe frame it as the social topics for this discussion now here, well, where should I start? I mean, first of all, I personally have disclosed on all these topics for quite a while. What is guiding us in the prioritization now is, again, this feedback from the consultations on what to focus on first. So the fact that we are now looking into human capital first is, for me, rather a bit of a timely exercise. And also there really understanding, it's very much the same as in biodiversity, really understanding what are the topics that are really needed to be disclosed about, that this helps the capital market to have better decision making. At the end, for us, it's always about this. And if we look through the letters and the feedback that we have received so far, yeah, as said before on biodiversity, it's not as clear as it is on climate, and that's now our task in this research projects to really figure out what are the key topics. Topics that have been in letters, of course, range from EHS, so health and safety topics, through diversity, human rights. I mean, and now it's a bit too early for us. Give us the time to really do proper research.
Don't want to bother, since you know already like making a statement. What it
and
will be
still,
in there.
I would, from a personal.
For me, was more interesting the part in more the, would say, atmospheric part in the in terms of like, is this a different kind of?
And I think that differs because
yeah.
I think there are certain topics where there is probably also globally. Let's take health and safety. I think there is, for health and safety, I would assume there is already globally a pretty clear joint opinion that this is important, and that a company also has a responsibility, and that there is a risk if you do not stick to certain rules and processes within a company, that this will cause then also the risks and also financial risks. And of course there are other topics where this is a bit more complicated, and it's our job to now figure that out.
Kerstin, the European experience.
Well, we have a very good experience. I mean, we have the same problems. You mentioned that already. So the metrics, although I disagree, we have some metrics in biodiversity, but we might come to that later. And the same holds for human rights. But so coming from a board that is more diverse than the ISSB, we have some NGOs that are quite experienced in this area. And also while writing the standards, we got some measures and some, at least policies, explanations that we included in our social standards.
Okay, so there's a body, and you have your own workforce, you've got things on
community,
on the value chain.
Yeah.
We've got some ideas, and I think the emphasis has been clearly on workforce in that context. And social aspects in the world of product building to Gerald. Yes.
Yeah, social finance is actually much more developed and prominent than people sometimes give it credit for. It's around some slight other nuances though. So it's education finance, healthcare finance, affordable housing finance, and areas like this. The interesting thing about social finance is that in the US in particular, it's quite advanced compared to the rest of the world. There is, for all banks that operate nationwide in the US, there is a law called Community Reinvestment Act that requires all nationally chartered banks to have a certain minimum portfolio of financings to socially disadvantaged communities, which we have as well as Deutsche Bank. But in addition, in the United States, the financing of municipalities, for example, is much more done by capital markets. So that's why you will find banks that are active in the US do quite a lot there. In our sustainable finance volume goal that we gave ourselves at Deutsche Bank, which is 500 billion until 2025, social finance plays a role. It's not the biggest. Climate is bigger, but it is there, and it's thriving. Also in developing markets quite a bit, I would say. When it comes to the disclosure questions, particularly about human capital that you asked first, it's quite interesting for us because there are areas within our own organization and many big organizations around the globe that are, I would say, advanced. Like diversity is advanced. Human rights is also actually quite advanced. Usually, if you operate in multiple jurisdictions, you're signatory to various human rights conventions and statements that you also publish regularly, which we do as well. And with the whole value chain discussion or supply chain discussion, this clearly has found its way, and it was already before with the due diligence that we all do, into the way that we operate with clients and in the way that we ask our clients to check their own supply chain. So that I would say human rights and diversity, that is actually quite developed. What we find interesting now, having done the first full-blown materiality analysis for our ESRS statement next year, is that there are, of course, other areas of human capital that are material for our own organization, and often areas that relate to our own workforce. And as a bank, this is maybe not the first logical thing that you do, right? Because it's not health and safety, for example, in a bank is maybe less pronounced than if you're a steel mill. And there are various areas like mental health, for example, that come out as quite material. And now I think this is the good showcase how reporting actually can work. We now take this and go to our own corporate functions that are specialists, HR, for example, and tell them, this is what is material for us. So what do you want to achieve in a couple of years there? Tell us. Tell us what you want to do. Tell us the metric and tell us the pathway, and then we can report on it. So I think this shows that reporting can be actually quite powerful to move an organization onto the right material topics, both from risks and opportunities, by identifying it and then having a tool that you can ask the relevant corporate function to actually focus their time on. And that is something that I've always seen in the development of sustainable finance, if you like it in the broadest sense, that only what gets measured gets done. I always say this as a CFO, I have to say this, but I think it's really true, right? So the minute we can talk about we would like to publish something, everybody understands will always be there. And the minute we as a bank, big bank, publish a metric, analysts will want to know where do you want to take it, and then you are on a certain trajectory. And I think that is important. So that's why materiality analysis, new areas that have always played a role, but maybe can play an even bigger role, like human capital in the financial system. This is something that you will see lots of development over the next couple of years, because lots of corporate functions around the world will get the call from their finance department saying, the organization and the outside world told us this is material, so where do you want to take it?
Is this something, Jenny, that you also experienced in your previous role, and like how Gerald described that? In the end, we also talked about certain social aspects when we discussed earlier on something like human capital, health and safety, and things like that. You said now for example, mental health and things like that.
You're putting me now in a difficult situation that I, of course,
I
want to speak in my, but I was in the lucky situation that I was doing sustainability for a company that is very, very much progress and advanced on all these topics. So I think typically, in this case, the company was aware of topics earlier on, and the disclosure really followed. But I think that's of course the case in a very, very global, very big, very advanced company, which is probably not the benchmark for all other companies. Yeah, but of course, these social topics are more and more of importance. And depending on your portfolio, not only for your own workforce, but also for the impact you are having then throughout your value chain, which can be huge depending on the business and business model you are in.
Thanks, Jenny. Kerstin, a little bit of a sudden. EFRAG also released some guidance around, for example, value chain and topics like that. Certainly also featured there prominently and in the development of further guidance. Is anything to be taken from that?
Well, we were forced to do so, right? So first you write standards and then you think they are clear, and then you hear, oh, they are not clear, and then you're forced to do implementation guidance from the EU. Yeah, well, we have, of course, value chain. We also have materiality analysis, which was, I think, the most important thing we did so far from my perspective, because that is the starting point for every company. And if you start wrong, that might not be very good. So I think that was the most important one. We are writing now transition plans. We are on that, and some more will come up. Yes. Well, I think, but you are doing the same, Jenny, right? You also do some educational material on all these topics. Yeah.
Okay.
I think it's very important to do so. Although I think, I mean, the first batch of companies is already through this analysis before we published them already. But I think for the rest of the companies, it's very helpful.
Yeah, for us, it's always a timing question, right? That we need long lead times. And particularly when something new has to be created, that's why we're always urging the more clarity we can get, the better it is. But I would agree with you, Kerstin, the materiality assessment guidance was super helpful. In your case in particular, since it's double materiality. And this is something in reporting land that is entirely new. And financial materiality has been known And it's not that you do a financial materiality analysis per se, right? You take a look at where accounting differences are maybe material or not. So this new lens of actually creating some new disclosure scope is such a sort of revolutionary thing that I think has not been done for quite a while now. Maybe when IFRS was introduced, it was the last time in that way. That's why I think it was a very, very helpful exercise. And what I particularly like about the double materiality process that is required is that you need also to get external validation in, right? So that's super helpful as well, and allows stakeholders to directly feedback to us and gives us a very structured process in which we can gather that feedback, because otherwise you never know where to start, right? So that's why I like the materiality analysis process quite a bit. And as I said before, we are using it to set our strategic direction, which is I say, it's a welcome tool.
Well, that's exactly what I would like to hear. So, and so I'm happy that you say, external stakeholders. I mean, we don't say you have to do a materiality analysis like this or like that. So you choose on your own. And the point of getting external validation, from my perspective, is very important. And that has been shown, I mean, years ago, right? We did the analysis also under GRI. It was a little bit different. But I also hear from companies that they sometimes don't like to do the external validation. Maybe it's because of resources. Sometimes it's also maybe they got surprises. But I think also what you mentioned, is very important also to see from external stakeholders. So I think it's a very important point. Although we don't say, we don't force companies to do so in our materiality implementation guidance. But I'm happy to hear that you do.
No, I think it's without alternative, to be honest, because we are in the court of public opinion, right? So we would like to get it right. And if we don't get it from external stakeholders, the feedback, then it's very difficult for us to know whether we are on the right track or not. So I think it's a very worthwhile investment to do.
Yeah, agree.
I think this was a good internal discussion between you. I would like to perhaps jump on something that we also discussed when we had our pre-call in the end, which was about the effect. And we will simply see how are things going to develop in the future. It's about the geopolitical side, perhaps in the end, that we touched upon also briefly in the first panel. Is this, from your perspective, if you look at simply like developments around the globe, be it in the United States in terms of like SEC required disclosures being put on hold, being released, and then simply like not being directly applied. We've also had seen now at the end yesterday the European elections, which also certainly will have certain implications. How do you see this impacting, seem like the agendas? And this is not only concerning ISSB, but this is also certainly to EFRAG and perhaps also reactions from those in the end who have a certain expectation in terms of data provision. Any kind of like perhaps global view on that? I think Gerald, you had some comments around him, like, because I think in the end this is either we consider a risk or an opportunity.
The world economy is transforming, right? So I would say that the business is there everywhere, and which means that you might have different names to things, you might have different concepts, but in the end, the business is globally developing. We see global data provision really improving quite a bit, and I think we should not sometimes have I would say, a too local view on things, particularly when the US comes into play. When you read the press in Europe, you can get a certain impression, and maybe when you're on the ground in the US and speak to companies and see what they are doing, what they are developing and investing, it's totally different. But what I would always say to people in Europe is maybe do not use your terminology that might be misunderstood or might be, misconceived for something that is not even there. I think that's where you need to be a little bit flexible how you call things. But I can say that definitely that the business develops everywhere, not just in Europe and the US, but also in Asia. And on the disclosure side, there is the quest for more transparency in all markets, and there is, I think, no way out, given investors are quite pressing on transparency. And that's again coming back to my first statement, why global baselines are so important, right? Because this will not go away. And as long as the money flows in the right directions and the business is being developed, which it is, I think we should not be too worried, in my view, about geopolitical differences when we are open to understand that there are slightly different approaches to things and maybe some terminology differs here and there.
Is there, from your perspective, you also had the discussion on the China coming in and certain perhaps variations to the theme. Is this for you something where you, in the end, sense certain differences, or is it?
I mean, again, first of all, we are really market driven, and this is not a political exercise that we are undergoing. If for me, always the strongest signal, so to say, is when I listen into our so-called jurisdictional working group. So our jurisdictional working group is actually a dialogue with the key countries around the world, so that they early on see what we're working on, and vice versa. And of course, still having independence on both sides. So the countries very independently decide whether and how they want to implement our standards, and we do our standards based on the consultation and board decisions on what we believe is the best thing to do. And still there is a dialogue. And when I listen into these discussions, you really see that actually all around the world, there is now this momentum, this dynamic of how can we have sustainability disclosure. And I think it's fair to, and they all want to do it good and they want to do it right. And still there are differences, also differences in terms of maturity. For us, I mean, you just have to care about Europe, which is already big and huge and has very different maturity levels on sustainability disclosure. If you now have the target to have a global baseline where like all countries in the world can participate in, you really have to understand also where these different countries stand and what they need. And some of them want to move faster and others cannot move faster. And it's important that we find again here also this balance of patience and pace, which I like very much in the morning session. And again, in these discussions, I see how they all try to find a good approach, how they all have this momentum, how they all progress, and that's what we have to embrace and move forward.
Yeah, I think if I can just add there, please, onto the points by Gerald there. As we know, the world is very interconnected, and banks like Deutsche and other internationally active banks are intertwined with emerging economies and advanced economies. And what we know as the Basel Committee is that within those jurisdictions, data availability differs enormously. So regardless of the best intentions of an internationally active bank like a Deutsche or any other internationally active bank, the data availability within jurisdictions may be very difficult to obtain. And that puts pressure on Deutsche to comply with these rules, or banks such as Deutsche. And what we've taken cognizance of as the Basel Committee is that these varying levels of data and methodological advancements differs across the globe. And it's going to differ more as the globe gets more intertwined in terms of the business that it does. And as a result, we've taken an iterative approach to this. And we realize that over time, we're going to develop better in terms of these disclosures. So it's not a point in time that we're trying to get the great now, but at the same time, the good shouldn't be the enemy of the great. And that's a process that we're going to go along. So, yeah.
Thank you, Lushendren. I think also in the end, underpins again, in the end, the puzzle needs to come together.
Yeah.
Perhaps further insights. You also participate in some of the international debates. Kerstin,
yeah.
in the end.
Yeah, I'm also in the jurisdictional working group. But getting back to the question, how to achieve global comparability, Georg, I think that's where you started off. So, I mean, we have clearly three different things. We have the US, as you said, we parked the standard over there. We have the ISSB, and we only have Europe, Jenny. But without our jurisdiction, I think you wouldn't have that much, support. So I think that's why we also established, or the establishment of the interoperability was so important. And I, of course, agree with what you said. Maybe the investors also from the US are looking at the global baseline. Although I doubt that the US will really adopt it. We saw that with the IFRS, it's a little bit more complicated with them. But yeah, China is picking up. But as I understand correctly, Jenny, China is taking the global baseline now, but is doing their own things with it. And I think that's maybe something we should fear if jurisdictions start to take the global baseline, but say, oh, thanks for doing that. And thanks for supporting, right, Europe and everything else, and everybody else who is also financing the ISSB. But we do our own thing with it. And then we don't have the international comparability we would like to achieve. So I think we should all aim for applying the global baseline and the ISSB standards and to show the outside world, okay, that's what should be done. Although I have to say, I mean, the companies have a lot of data to establish, to develop. That's what you also said. And I think in the first set, if I would be a company, you know, I had trouble to say, okay, I also apply ISSB. So I expect companies maybe in the, you know, in the following years to also apply the global baseline. And it's not an easy task. You talked about the strategy. That's obviously what's coming up, and that's what we are aiming for. But if you look into interoperability, you know, for example, we have market and location-based for ESRS. We only have location-based for ISSB. So you have to explain also if there's a difference. You know, it's not only one data point we have to establish in companies. It's a little bit more than that.
I think you've released also in the end your support in how to set up such a kind of plan for implementation. I think the idea is certainly to have the global baseline as the global baseline to the extent possible. And then
so different comments.
Yeah,
so in terms of the use of the standards, we've just published actually our inaugural adoption guide where this is clearly
that's what I meant.
Okay, good. That's what I wanted to say. So where there's clearly described sort of what is the criteria, and one key theme here really is focusing, so to say, on the end product in terms of what is really the information, the data that is being disclosed from the standards that are then mandatory in each country. Because again, what is key for us is that there is comparable decision useful information that investors can use in their decision making, and that's actually what this guide is describing then in detail. And it's also not too many pages, as we had the page comparison earlier today. It's also something you can digest pretty easily. That was one key topic. What was the other topic, Georg? Did that answer your question already?
It was about in the end, like, what is the offer? Then how can we get to the? And I think Kerstin's pointed about the end acceptance of the idea of a global baseline, and what degree do we vary? I think we all heard we are on a journey somehow, trying to align things, and I think you simply like pointed to simply like what you offer, simply like also ISSB simply to get to that point. Yeah.
I think you had a question from the audience. I saw a hand up.
Yeah, I think we can open this because we have only 10, 12 minutes left now for questions to the audience, and I think for this
thank you.
Committed, raising your hand, please.
Discussion. This is Matthias speaking from Glossos, and I have a question which is towards the global comparability. And we see this operational challenge for sustainability information preparers, as well as for the analysts on the investor side. Before doing the things right, they have to define to see doing the right things. Means in the past, what they did is the stakeholder surveys to get a materiality, somehow a materiality. They could even steer which people they are asking to know what they want to disclose to prevent disclosing those things that they don't want to disclose. Means we have to shift from a subjective analysis of the materiality towards an objective one, which means before I'm disclosing my sustainability metrics, I have to sit down and to really think about and to analyze what metrics and what's material. So SASB is giving us a classification with that, which is the 6-sector classification, the sustainability industry classification standard, which offers a metric somehow regarding risks as well as opportunities. So it would help a lot, and this is the question, is there a roadmap to further develop the 6 classifications that the information preparer as well as the analysts of these informations already know somehow a global baseline of materiality, knowing, oh, it's this industry. I know these 1, 2, 3, 4, 5 things are material. And I'm going to ask them, why didn't you disclose that? As we know from the consultant side and the auditor side, somehow everything is material. Guess why? But in my opinion, having a global baseline regarding the metrics requires a step before a global baseline of materiality, having the same classification. Then this comes to the second question, as we have with CSRD and ESRS, a link to the NACE codification, which is the European classification of that. And based on that, the industries have to do their industry-specific compliance in the future. So what's the roadmap of the 6 classifications set by ISSB with a clear focus on risk and opportunities of sustainability and a possible interoperability mapping with the NACE codifications, which we have on the European continent?
This is going to be a difficult one. I'm not sure whether we can check now with
You
Jenny
help me then
on the
again,
line
right?
of
With the second
thinking,
part. Okay.
and
Okay, let me start.
I'm not sure about the link then to the NACE course, because I think this is not the immediate.
Let me try.
Yeah.
We can try together maybe. So, I mean, first of all, I don't know how much people know about the ISSB standards and 6, what you're now referring to. It's basically a sustainability disclosure standard, investor focused, that is in our heritage now, which has 77 industries, so all industries covered in 77 industries. And for each of these industry, there is a set of topics and metrics that are typically relevant for each of this industry. In terms of pages, it's around 20 to 30 pages per industry. And these topics and metrics that are in each of these 20 to 30 pages per industry cover the holistic sustainability risks and opportunities. We have these standards in our heritage, and we have committed to enhancing the ISSB standards. We have done that already a little bit last year with the first project that was taking care of rather internationalizing the ISSB standards, because not in all terms there were international metrics there. Sometimes they were Europe focused, sometimes they were, for example, US focused. So that's the first exercise that we have conducted there. And so now in the agenda consultation, again, there was the clear wish that we overall enhance the ISSB standards, and that's on our work plan. And in our last month, I think it was last month's board meeting, we also particularly spoke about 6, which is basically this classification system in which of these 77 industries your company then falls. And we have also agreed there that 6 will continue, and we will continue to work on, and we will continue to also enhance the 6 logic. And last but not least, in our existing standards, we are referring to ISSB exactly with that idea that you've mentioned in terms of as a point of orientation, I would call it, that you look into your industry to understand what are typically material topics for my industry. That was now a very technical response. Maybe on a personal note, I had a friend, or I have a friend, and she's CFO in a smaller company, and she asked me, I don't even know where to start. And what I said is, why don't you start with the ISSB standards? And we together went into the ISSB industry classification, and I said, well, your company, and then we looked which is the closest industry, and gave her 22 pages, it was in this case, and said, why don't you have a first look into this? And she said, yeah, that resonates. And she could immediately say, being the CFO of this company, well, these first 10, yeah, of course, that's key for us. And then there were maybe 2 others where she was a bit like, I don't know. But that's exactly the idea of how to use them. And that's how we do that.
Okay.
In terms of NACE, Kerstin, that's probably for you. And I think also on these classifications, and ideally having mappings and all that, which is from my perspective also doable. I think also there you have to keep in mind that these different industry classification systems that are out there worldwide also have different targets and mandates. In our case, for 6, it's about clustering sustainability related risks and opportunities based on industries, which is not the case for all other industry classification systems. And I think that's why it's maybe also a bit normal, natural, given that they will differ and you somehow have to live with mappings. But
Kerstin.
Yeah. If I understand you correctly, you're asking what happens if we do NACI and others do different things, right? Basically. Yeah. Yeah. Mm-hmm. Yeah. Yeah. Yeah, but it's only a classification question. So we discussed that last week in our board meeting. So we will follow NACI and then we will map SIG or some, other jurisdiction might use other things. And then we just map what is NACI and what is the others and how can we get it together.
Will really not immediate link, but in the end, perhaps indirectly then to draw conclusions.
And maybe also there, it's not, that's also one of these typical misunderstandings. The idea on the ISSB standard side is not that you now take these 22 pages and you tick mark every single box. And if you only have 20, the auditor says it's incomplete. That's not how it is thought to work. I think that's also key to understand.
I think we covered now this topic at length. Is there a further question? Michael Schmidt.
Well, thank you. Yeah, Michael Schmidt. I in various roles represent the investor's perspective, as what we can say, on accounting and also sustainability accounting, as I would call it. I've got a remark and a question maybe on the efficiency of the procedures, because as Gerald rightly mentioned, capital markets work on standardization and efficiency and scalability. I'm very happy about the interoperability table that is out now, but looking further out, as you develop the ISSB standards more, ESRS is already there, GIR is there, SASB is there. Would it not be sensible to actually have an ongoing interoperability discussion and development? So I can only encourage that, because we waited basically more than a year for this interoperability table. And I can only tell you, in the investor community, not the ones that are CSOs or ESG responsible persons, but the traders, asset managers, portfolio managers or analysts, they don't even know what ISSB is about, let alone ESRS, they get it put in front. But I think this is very important that this is not more confusion around this topic. That's A. And B, also procedure-wise, as we implement those, as the standards are implemented, of course, you can only report what you do beforehand. And in that respect, to what extent are you going to make reference much more to ISO standards, for example, International Standard Organization standards, as to procedures and so on? We are used to that in some of the health and safety areas. And it's much easier for me as an investor to look at an ISO reference and say, well, there's an ISO certificate. So this part of the process, even if there's an auditor, I can also say there's an ISO standard or ISO certificate followed. So just in order to make things more modular, more scalable and more efficient, I just would like to get your view on those things, because I think otherwise you get lost in translation. And as to the point of Emmanuel, this is so important that we are not getting lost in translation. So
let's take this first point to Jenny and then to Kerstin. Perhaps with you on that, because I think this has to do with the puzzle. Or do you wanted to say?
Maybe I start, Jenny.
We can
also switch. Yeah, thanks for the question. Very important. So we referred to ISO and in our standards partly. And you don't, of course, because you're, or do you?
I don't think it's of course. I mean, again, we are, no, because again, and that's also now the case for the future standard developing, or let's look back. So of course, we are looking left and right, what has already been established successfully, what is currently being developed. If we to proof point that sort of on the past, we have TCFD incorporated, we have the heritage of ISSB, we have an MOU with GRI, we have this great interoperability work with EFRAG, and this is happening.
Yeah,
and
but
in the future,
you always include companies you have in your scope. So ISO is not.
But with ISO, if there was something, ISO is not special to any other existing framework, or that's what I'm trying to say. So if in this research project it turns out that it makes sense to have certain reference hardwired, we would do that. We have that with the greenhouse gas protocol. So it's a pure topic, content, case by case, so to say.
Okay.
Logic. That's
I understand it differently, but let me add on to the first question. No,
can certainly.
Okay,
Kerstin, please.
Short, Michael. So I learned a lot of things during my stay at EFRAG, and I also learned that politics and efficiency is almost not correlated. Maybe negatively, yeah.
This could be like even like the last word for this session, but I think we should end on a positive note. And I think simply like I think my key takeaway was a little bit also from this last question, and these worlds are like growing together into into a single, I think, or puzzle. If you compare this to a puzzle, this comes to each other and forms in the end, hopefully in a not too distant future, something like that we have a coherent set. I think we've discussed today a lot in the end about like how can we proceed, and also that some, I think, some of these, you would say, basic things that are going to play a role in that. Perhaps I can invite each participant of the panel back for a last short statement, 1 or 2 sentences, what he in the end sees now, also based on the discussion we had today. What do we do now in terms of global baseline, in terms of what is important for you personally? Are you happy to start off?
Sure. So I think from the point of the Basel Committee, it is very important for us to ensure that our standards are interoperable, and we will continue to use standard setters like the ISSB and EFRAG that we've used in our standards to ensure that there isn't a reporting burden on banks, an undue reporting burden, and that they can use other disclosures to the extent possible, provided they relate to the safety and soundness of banks. Thanks.
Okay, we simply do the row.
I think we see very strong dynamics, and it's now our task to sort it out and to bring that to a worldwide system that works well for all participants.
Okay. Thank you, Jenny. Gerald?
Yeah, as I said before, the more comparability, the better, right? And the clearer interoperability is, the better. So that's what we would like to see.
Yeah. Kerstin?
Not
the last statement.
No. I already made my last statement, as you said. No, don't expect too much from reporting. I mean, we have established transparency standards, so performance is coming up.
Okay, thank you, Kerstin. And from...
Yeah, in general, global baseline, I think, is a good idea, but to be at least slightly on the other side, I would say a little bit of global competition is also good for the best standards. Yeah. And so if demand across the world differs, is heterogeneous, then it's also fair to have heterogeneous standards to some extent about what needs to be disclosed and how it needs to be disclosed.
Thank you, Professor Berg. So I think our panel now comes to an end. I think we give a round of applause to the panelists.